All right, my friends, today we're going to show you how to reduce your life insurance premiums. A very important and exciting topic, I realize, but it's so important because most people have life insurance, or they should have life insurance. A lot of people get their insurance through work, and that may or may not be good, but a lot of times it makes sense to get your life insurance through a private policy as opposed to just getting it through your work. And the reason being, if you have it through your work, essentially the healthy people are subsidizing the sicker people. Doesn't make it bad, doesn't make it right, doesn't make anything. It just is the facts of life. Is that if you're healthy, you're paying the same rate if you're in the same age band than someone who's not as healthy. And that's, you're subsidizing the sicker person. And that can be good. If you have no other option for life insurance, getting it through work is actually a wonderful, wonderful thing. The second thing about employer-only life insurance, though, is it increases with age. There's age bands, 40 to 44, 45 to 49, 50 to 54, and so on and so on. The older you get, the more expensive the life insurance becomes, and it becomes pretty expensive as you get up in your 40s, late 40s and 50s. A whole lot cheaper, if you can do it, to just get your own policy at a private company like USAA or I don't know, Navy Federal Credit Union, TIA CREF, something like that. Just because a private policy will be cheaper, you can get it fixed. So a 30-year term, you're paying X amount of dollars a month for 30 years. And no other way around that. As long as you make the premiums, you have that life insurance. If you change jobs, the life insurance follows you. If you get sick, the premiums don't change. If you increase your age, the premiums don't change. You lock it in, it's there as long as you make the premiums. With employer life insurance, that's not necessarily true. You could change jobs. You might have a new employer who doesn't have life insurance benefits as an option, and that's completely contingent on the employer. Two, frankly, with an employer, you're only getting a certain amount of your salary, life insurance times your salary. So a lot of times it might be 4 times salary. So if you're making $50,000 a year and the max you can get on life insurance is 4 times that salary, that means the max you can get is $200,000. Is that enough? I don't know. My inclination is probably not. Not if you have a mortgage, not if you have student loan debt, not if you have car loans. For me, I have 4 kids. My wife doesn't work for money. If I were to get killed, 4 times the $50,000 salary wouldn't even come close to paying off all our debt. As much as I hate to say it, my mortgage is a whole lot more than $200,000. So for me, 4 times salary would not cut it for life insurance. It just wouldn't. On top of that, too, don't forget, is that I'm 47 now, but when I hit 50 and 55 and 60 and so on, I still might need that life insurance, but the premiums are going to skyrocket. They go, I'm telling you, just look at any employer life insurance table out there. Look at VGLI, Veterans Group Life Insurance. You can go to the federal government website, VGLI, and they have an age band. It shows you this significant step up in premiums for the coverage. So a couple of things with your employer: they could drop the insurance. They might not offer you enough. It's going to be expensive as you get older. And what if you quit? So what if you quit your job and you say, "Yikes! I need the insurance nonetheless." Well, then you're going to be where I was a few years back, and I'm going to show you what I'm talking about here right now. So here I got my trusty old whiteboard that I just put up in my basement. Beautiful place right here, very high speed. But I'm going to show you what happened with me as I try to get private life insurance through my outside of my employer. Because for me to get enough life insurance coverage through the employer, it was just going to be expensive. I said there's got to be a better way. So what I did is I went to initially get to apply, and I wanted $750,000 of a 20-year term fixed. I wanted $750,000 20-year term. My employer wasn't going to offer anywhere near that through the employer program that they had. So for me to get that kind of life insurance, I had to do it through USAA in this case as a private life insurance policy. It had nothing to do with my employer. So I went in there, I had the nurse, she came out, I can't remember, but I had to get my blood work done, had to get an EKG, checking my heartbeat, the height and weight and all that. And one of the silly things that life insurance will do is BMI, body mass index, and we'll get into that here a little bit. But BMI simply is just how much do you weigh relative to how high, how tall you are. The higher the BMI, the worse. And the insurance company says, "Oh, you're obese," for instance, and I'm obese because I weigh more than my 5'9" body should be. I weigh more because I do work out with weights, but I'm not fat, but I'm just obese according to the BMI metrics. As silly as that is, as one of the categories that they use, the insurance companies, because that's been, I guess it's just received mass appeal as a way to evaluate the likelihood of you having a heart attack and keeling over, and the insurance company have to pay hundreds of thousands of dollars. So they use BMI, but they also use these things called HDL. HDL is your cholesterol level, and H is high. That's a good one. So you want a high HDL. They use LDL, which is your low cholesterol level. We want that to be low, and then they use triglycerides. And we want that to be very low as well. So we HDL, LDL, tris, and then they use your weight as well. So here I am in March 2012. Did not have enough life insurance. Something were to happen to me, my wife would be destitute. So I said, I need to get more life insurance. I'm not at this stage. I'm not even going to talk about term versus perm and all that. Don't care. I'm just going to talk about what happened to me in March 2012 when I went to USAA to apply for life insurance. So they did blood work, all right, and it came back that my HDL, again, my good cholesterol, was 36. My LDL, my bad cholesterol, was 79. This is the big one. My triglycerides were 325. That's through the roof. My weight was 193. Again, I'm 5'9", 193, 5'9", with triglycerides at 325. Bad cholesterol high, low cholesterol, good cholesterol low. I was underwritten, and again, underwritten just means I was approved for life insurance, but I was underwritten for a very substandard rate. I think mine was standard, maybe even standard subs. I can't remember, but it was almost like I was smoking cigarettes, and I wasn't. But just because the risk of my weight, my BMI, my weight, my good cholesterol, my bad cholesterol, my triglycerides, and made USAA and any insurance company, this isn't just on USAA, think I was a health risk for a heart attack. Because remember, heart attacks is one of, if not the leading cause, I think it is. It's the leading cause of death in the United States. So if you're an insurance company and you have all this money out, liabilities, the liability insurance companies, how much they have to pay out if people suddenly fall over and die. And the number one cause of death of your client base is heart attacks. Well, you can't blame them for saying, yikes. We got to make sure that if we underwrite people who have a threat to a heart attack, that they don't keel over after we've only collected a couple years of premiums. Because remember, term is cheap. You're only paying $50, $60, $70 a month, and you're going to get, $500, $250, $500, $750,000 of life insurance. So for an insurance company to stay solid, they can't just start paying people $500,000 when they've only collected $200,000 or $2,000 of premiums. So this is one of the things they do. So I was substandard rating, and again, I can't. There's a bunch of different ratings, but I think I was actually rated like a smoker, and I don't smoke. I don't drink either. So that was kind of odd to me, but it was what it was. So I declined the life insurance because I couldn't afford it. I said I just can't afford the premiums for this, and I was nervous. Now I did, again at that stage, I did have 4 or 5 times my salary at work. I can't remember exactly how much I had. But it was a decent amount, and we lived in Texas, so our mortgage in Texas was a lot lower than what it is here today because the housing prices back in Texas are so cheap, or at least they were back then. So I did live in Texas, so I felt that my wife would have got by okay if something happened to me while we lived in Texas I think my mortgage was $208,000 or something like that at that point. I had 4 times salary, maybe 5 times salary at work, so I had enough to get by. It wasn't as cheap as I would have liked to have been, but it was cheap enough, and it provided me enough security knowing that if something happened to me that she'd be fine, that I was okay with that. But I read a book called Why We Get Fat, and that changed everything. So I read this book, Why We Get Fat, because after I got this rating, I've always been in pretty good shape. I mean, I was in the Army, I was in the infantry. I run. I don't really run that much anymore, but I do a lot of cardio and working out with heavy weights. So I was just, I don't want to say dismayed, but I was frustrated. I said, this isn't me. I'm not in bad shape. I didn't feel like it. I mean, I could have stand to lose a couple pounds, but I felt still pretty good about myself. But then I read the book Why We Get Fat by Gary Taubes, Taubes, and you should read it. It's a wonderful, wonderful book. It absolutely changed my life, and I have a feeling it'll change yours too if this is something that you're struggling with. And he talked about carbs, all right? So he talks about the carb diet, the fat-free diet, the high-carb diet, and how it's just been a monstrosity for American people. And you look at obesity amongst children today, and one of the reasons is absolutely they're taking so many carbs. Not eating eggs, not eating meat, certainly not eating bacon, but they're eating lots of processed food, lots of carbs. Look at Starbucks, man. I mean, all these people going to Starbucks, these huge sugary drinks. It's just horrible for you. So I read this book, Gary Taubes, Why We Get Fat. And I said, you know something? I'm going to follow his model to go low carbs. And I did it. And I love French fries and I love ice cream. But I said, I'm just going to give it up. I'm going to go low carbs for a couple months and see what happens. So look at this. October 2013, a year and a half later. All right. And this actually, it happened a whole lot quicker than that in terms of my weight. But look, my weight was down 180. I was 180 in October 2013. And how do I know this? Because I went to USA and I reapplied for life insurance, and I have all the various forms that you have to fill out when you go to the doctor for physicals and whatnot. And I have their height, the weight, and all that sitting right here. And this was from October 2013 that my doctor signed off. So that way, when they did my health check, they could see my LDL, my HDL, my tris. And it was pretty amazing, actually. So I went low carbs for a little bit. And when I went low carbs, I lost a ton of weight. I was down like 175. I didn't look good. I lost a lot of weight. But in terms of your body structure, you see the way Bill Clinton looks nowadays because he's gone vegan or something like that. He just looks real frail, frankly, and I was starting to look like that. I look at the pictures back then, and it was nice to have lost all that weight, but man, I didn't. It was just too much. You look too thin. You look frail, and even that I was still 175. It wasn't like I was, a featherweight in a boxing match or something like that. But that's not exactly how low I want to go. So I said, okay, I'm gonna start reincorporating a little bit of carbs because I do like French fries, and I do like ice cream, and I still follow the model: eggs and bacon in the morning. Eggs and bacon in the morning, tuna fish with mayonnaise for lunch, and then meat and no potatoes, but meat and salads, lots of greens and stuff like that. In the evening, mostly I just cut out eating snacks. I didn't eat. I used to love to eat Triscuits right before I went to bed. Horrible, horrible, horrible for you. So I stopped doing that, and because of that, I lost weight. I lost a lot of weight pretty quickly. I'd say within a month I had lost 20, 25 pounds. But anyway, I didn't like the way I felt there, so I started getting a little bit more carbs, started getting exercise, I started getting back in the gyms to put some of that, the body, not fat on, but muscle on. And I'm telling you, look, so my HDLs went up by 18. That's a 50% increase in my HDLs from when I was March of 2012 to October 2013. I went from 36 to 54. That is an 18. That's an 18%. That's an 18 number increase in HDLs, which is a 50% increase. 50%. My LDLs. Now my LDLs did go up, and people say, "Whoa, your LDLs went up. That's cholesterol." Well, guess what? We have lots of proof now, or at least evidence. I don't know if we can say proof that LDLs don't matter that much. HDL, we want you to have your good cholesterol. HDL, we do want that high. Your LDL really doesn't matter. And why did my LDL go up? Because I was eating a lot of eggs. Eggs do have cholesterol. Absolutely. So with the cholesterol increase, my HDLs absolutely went up, but so did my LDLs because my cholesterol is increasing. So for you and for me, this right here, LDLs, is irrelevant. For the insurance company, though, they have to judge you on something. Rightly or wrongly, they still look at your BMI and they still look at the LDL, even though most evidence now out there today says LDL is irrelevant relative to your likelihood of having a heart attack. We want your HDLs, your good cholesterol, to be high. We want that to be high, but at the end of the day, the LDL being high or low, it's I don't want to say meaningless. It's bordering meaningless. Now, the tries are the big one. The tries, there's lots of studies, and some of these studies, who knows? But I've seen enough, and I read Tobbs' book and some other books since, that I do think triglycerides, do have some kind of indication of potential for heart attack. And 325 is through the roof. Through the roof. So I don't blame USAA for saying, oh, we're scared. I went to 92. I went from 325 to 92. Let that sink in. I went on a high-fat, low-carb diet. My weight went from 193 to 180, and this is after I picked it up because I started putting a little bit more carbs on again. Because again, I was down to like I think I hit 172 at one point, and I hadn't been that light in a long time. I didn't like that. But even here, I lost 13 pounds. My tries basically a third of what they were before. Pretty incredible in 18 months' time. In fact, I bet if this was October 2012, it would have been roughly the same. The only thing would be my LDL went higher, and the only reason that went higher is because eating eggs, and I still eat a lot of eggs. Eggs don't fill me up like I wish, frankly. You throw some ham, throw some cheese on there, but that will fill me up. If you just eat eggs by themselves, a couple scrambled eggs, I'm hungry after about 10 o'clock or so in the morning. I'm hungry again about 10. Been eating a ton of almonds. Oh man, do I love almonds. Those salty almonds that you get from, I don't think it's Costco, Blue Diamond salt. Oh, man, those things are fantastic. Eat almonds. Not cheap, but man, they're good. Tons of protein in there. Oh, I can eat those all day long. Lots of bacon, lots of eggs, lots of steak, lots of chicken. I try not to eat potato chips. Potato chips, I try not to. That's bad. French fries, I like French fries. I Lent right now, guys. It's February 27th, so I'm in the middle of not eating ice cream. I gave that for Lent, and man, we were at the store today, my wife and I, looking at this just huge row of ice cream. I was like, oh man, because I love ice cream. But I'm giving up for Lent, and so my weight will probably go down a little bit simply because I'm not eating any potato chips. And I'm not eating any ice cream. And I love potato chips. Potato chips, not so much. I love French fries. So I'm essentially giving those up too. I'll probably have some tonight, but don't tell anybody. But so anyway, at the end of the day, you go low carb, high fat, and remarkably, your numbers improve dramatically. Dramatically within just a couple months' time. You lose weight, you have more energy. I'm just telling you, you got more energy, you're going to lose weight. Your HDL goes up, your LDL don't care, your tries go down, your weight most likely to go down. You just are satiated, I think that's the right word, when you feel full. You feel full. I'm just telling you right now, it's the best thing ever. So a couple things here. Get Gary Tobbs' book, Why We Get Fat. Follow the model if this is something of your concern. Number 2, wait a few months before you go reapply for or apply for life insurance before you do that. Because if you apply here, and this happens, and then you apply here, they might say, what happened? Why you dropped so much weight? And that might be held against you. So what I'm telling you, if you feel like you're overweight or you're not eating if you're eating lots of carbs, don't apply for life insurance yet. Just wait. Give it about 2 to 3 months. Shoot, a month. A month of incredibly low carbs. Just go a month. Watch the numbers fall. Watch your weight fall. Watch your BMI go down as well. And again, as illegitimate as that is, which we know, life insurance companies still use it because they need something to judge you. And you can't blame them. This one, the tries, folks, that's a big one right there. So you need to have life insurance. You need to have it outside of your employer. If you lose your job and you go to a new company that does not have life insurance, you are stuck if you're in a high risk category. You're either not going to get it or going to get it at a premium that's substantially higher than you can afford. So get yourself a private policy on your own. Carry that sucker with you for the rest of your life. And folks, the younger you get it, the cheaper it is. So get it when you're 35. Get it when you're 30. I had a 30-year term policy when I was 30 years old. And I canceled it. Stupid, man. I was paying like $18 a month. It's $500,000. I should never have canceled it. I would have still had it today. I'm 47. I would have had another 13 years left. Stupid. Never should have done that. But I canceled it, I think, when I only had my first kid. I can't remember. But I canceled it. It was just dumb. So if you're 30 years old, get yourself a 30-year term. If you're 40 years old, get yourself a 20-year term. If you're 50 years old, get yourself a 10. Get yourself a policy that will cover your debt until you're out of debt and your kids are out of the house. So essentially until you're 60 years old. And don't rely on your employer. Don't rely on them. I'm just telling you, it's too doggone expensive as you get older because you are subsidizing the people who are in less shape as you. And I want those people to have insurance. I do. And for them, it's a smoking deal because they probably will not get their own insurance. They'll probably be denied. But if that's you and you can qualify for a better policy, like here, you should take advantage of it for sure. Lastly, let's say you go out and drink it with the boys every now and again. You like to have a cigarette. Man, stop for at least 30 days. Get the tobacco out of your system. So if you go have a smoke at the bar and you're shooting some pool with your friends, and the next week you go apply for life insurance, there is going to be nicotine in your blood. And because of that, they're going to assume that you're a smoker. Don't do that. And wait 30 days. Don't smoke anything. And wait for it to get out of your system. And most likely have a better chance of applying or getting qualified for life insurance as a non-smoker. Lastly, don't lie, but never volunteer. Never volunteer anything to an insurance company. If they say X, Y, Z, just answer the question, yes, no. But don't volunteer. Don't go on a tangent. They're looking for reasons to get you a higher rating because the risk to the insurance company is through the roof. Think about it. Again, they're on the hook for $500,000 if you die. You're going to pay $50 a month. That means you're paying $600 a year. $600 a year. After 3 years, you're dead. You paid $1,800. Your wife gets $500,000, or your husband gets $500,000, or your kids get $500,000. Insurance company can't stay in business doing that. So make sure you at least account for the cost of the life insurance to you and what the insurance company is looking at in terms of their ability to judge you to charge you the most premiums for your money. Okay? Hope this helps. Subscribe down below. Comment down below. If you have any questions, thoughts, or comments, love to hear them in the notes down there. And I appreciate you being on with this video here today. And if anything you want me to talk about in the future, just shoot me an email or put in the comments. Thanks, guys. Bye-bye.